Good afternoon, trading world. It is about 30 minutes after the close, February 25th, 2021. I'm going to get a head start on the pre-market outlook for February 26, 2021. I'm not going to go through a whole lot of things. I'm going to basically give you a view of the entire market using one product, which is going to be the SPY. That is basically the proxy for the S&P 500. And we're going to talk in general terms, but in talking these general terms, it could apply to pretty much 80% of the products that are being traded right now in the S&P 500. There is something that you should be really concerned about that happened today. Well, a couple things. I spoke in an earlier video about the QQQ and the XLF playing tug of war, and with the XLF being up, it being the only thing holding the market up at the moment, the entire market, because the QQQ had already dropped the rope and it was basically pulling at the seams of the S&P 500. That tug of war between XLF and the QQQ. Something to be really concerned about from here on out is this right here. When you're looking at the S&P, this is the S&P 100, but when you see numbers like this where everything is moving all in one direction, and that direction happens to be down, we have a problem. It means that we can go for long rides. So when I talked about the QQQ and the financials being in that tug of war, the financials dropped their side of the rope, and they are now falling, and that is what has made the overall market basically fall. So getting back to the S&P right now for tomorrow, keep in mind that we could be moments away from what most people call a dead cat bounce. So you have to be very careful. And for those of you trading small accounts, one thing that you have to be very careful of when you're trading small accounts, and the PDT rule applying to you, you have to be very good at trading the off market cycles, which means like the late evenings, being able to determine what's happening from the first half of the day to the second half of the day, and being very good at picking what part of the day you enter and exit trades, because most of the time, if you're in a small account, you're trying to make sure that you don't go in and out too much same day. So you have to be really good at putting that trade on in the latter half of the day in preparation for where things will be tomorrow. what I'm going to look at here with the SPY, we got a lot of resistance right here. So coming into tomorrow, if you haven't already, if you haven't gotten positions on, it could be very quick day tomorrow, where if you can come in and get in at the opening, if we haven't gapped down overnight, this 383 area, area is going to hold a whole lot of resistance. If we stay below this 383 area right here, the first target is going to be 379, and then the second target is going to be 375 and below. I really don't want to talk about targets to the downside, because we've basically entered into a black hole. We can go and we can go and we can go. There's no, right now I really don't want to look at targets for the downside, because I'm going to base everything off of internals as they come. When I see a turnaround in internals, I'll probably take a quarter of a position off, or 50% of a position off, and just look, because right now we could go far down very fast. As well as with this dead cat bounce, we can go far up pretty fast. So what I'm saying is that 383 holds a whole lot of resistance. The next resistance level that's going to be of importance is going to be around 385. If we can stay below that 385, we're going to continue this downtrend. But if we make it above 385, we're going to have that dead cat bounce that's going to get us all the way back close to near this 390. So keeping an eye out, your best entry, depending on how things work out tomorrow, is if things don't move overnight and internals open up to the high side, it will give you a chance to enter somewhere here between this 383 and 385. And what you should be looking for is doing a put option with a delta of at least 70 to 75 and at least 10 to 15 days. And if you understand how to do it, put together a OCO bracket, so that way you can put a stop loss, maybe $120 above, especially if you're entering right here at this 383, to kind of give it time to see whether we can hold this area for another leg lower. Because we may continue this leg lower, because the ultimate target is probably going to be Once we eclipse this 380, the ultimate target being this 380, once we eclipse this 380, we may kind of hang around here, and that's probably where I suspect maybe to get into this dead cat bounce, or just kind of chop around and consolidate a bit more. But once we do that, we're headed down into the 370s before the next breath, before the market decides to consolidate again and just kind of chop around trying to catch its breath. So be very, very careful in looking for this dead cat bounce, and it's going to be a kind of a broad turnaround in the internals. And that pretty much sums up everything I'll be looking for. I took a picture early today. The reason why I don't want to waste time in going through everything is because when everything's moving this same direction, everything's pretty much trading the same. So the exact same trade is basically valid for the QQQ, the IWM, the XLF. Everything looks the same right now. So there's no reason to try to play different markets, maybe for risk management or margin purposes. But for me, there's no reason to try to look and do research on a whole bunch of different products when everything is moving the same right now. Like I said, in order to really get this started, this correction started, we have to have a gap down of maybe 20 points. Maybe, well, on the S&P, that gap down is probably going to look like maybe 5 points or so. So looking at tonight, if we get that gap down, that correction is here. We're in the midst of it. So all you can do is basically get short and hold on at these moments where the market tries to catch its breath and consolidate. And again, be careful, be very wary of that dead cat bounce being around the corner, because it will come and it will make it seem like all of this is over with very fast, because we could travel as fast as we came down here. We could do half of this range in half that time on the bounce. So that's what you have to be very, very careful of when we get to this part and the volatility, the way it works, because a lot of people still may have gotten caught off guard and trying to exit positions. So we haven't gotten that all out fear just yet. So you have to be very careful of that. And from this point on, there are no longs for me. No calls, no longs. I'm not looking to even buy any stock. There are certain things that I will start to look at eventually, but during the midst of this, everything is short. It's either short or hedged. But there's a saying that the market will take the stairs on the way up and fall out the window coming down, which means to me money is made twice as fast going down. So with that, as always, know your risk, be careful, be safe, and have a profitable day.